Hi, everybody. Good morning. It is actually late on July 5th. I'm going to release this video as an update early in the morning tomorrow. Just wanted to address some of the action in gold, US dollar, and talk a little bit about a couple of other markets and opportunities. Listen, we're in the summer doldrums, really, is what it comes down to in the mining space. Excuse me, which it's very common in summer for us to see this type of an environment. However, there is some hope in terms of early to mid-July being the start of a fresh rally in the gold mining stocks. In fact, we've seen that 6 out of the last 8 years, despite the bulk of that time frame being in a severe bear market. Even in the bear market, we saw the lows hit in early to mid-July, rallying into the end of September. So we'll see if that happens here now. We've had a correction even just in the last few days, which looks like it could get a little bit more severe before we do bottom, but this could all come into play this week, next week, and start moving back up again. It's really a situation where I would not be surprised if we see one more flush, per se, one more scary little shakeout in the miners in the gold space, really putting a nail in the coffin of anybody who had some hope from last year's revitalization of the sector and surge. Wouldn't surprise me at all if we see that before gold and silver really start to take off. I'm bullish. I think that the shorter term opportunities or trading environment is really, it's just neither here nor there. And I'm going to show you some longer term perspectives on a couple of things that are very relevant. As you see on your screen, I'm stealing this from the Aiden forecast vis-a-vis the Weber Global Opportunities newsletter, which I've recommended in the past. I'm sure Chris won't mind, but the US dollar index, if we're going back to when the dollar was taken off of a link to gold, which is back in 1971, this is the chart. So what we see here is some seriously declining lower highs and lower lows. I mean, we're talking about decades in terms of a trend here. And sometimes I like to take a step back and look at these longer term trends, to see where we are in these longer term cycles. And it's not going to be helpful for people that are worried about the day to day with your account and with trading. But this actually speaks volumes in terms of what is potentially looking like the beginning right now in this weakness of the US dollar of a multi-year decline and weakness, which is what I feel is going to happen. This chart would indicate that it's rolling over at this time after we've seen a big bounce since the financial crisis, really in 2009. But the days are numbered on this dollar rally, and I think that it just makes sense that after we delinked from gold and there were no checks and balances of what needed to be in store, that the value of the currency, the fiat currency, would be diluted over time. And we've seen it occur. And now, we've had a rush to the US dollar in the last few years as a flight to quality after the financial crisis. The best, worst house on the block, if you will, in terms of balance sheets of nations. And, these things go in cycles. And so I think the US dollar is in for a weaker time ahead. And also, this aligns with what I will show you next, which is the price of gold is in a massive 10-year triangle pattern that, it continues to get tighter and tighter. So this is a 10-year chart, folks. The price of gold is continuing to trade within this tightening point here on the right, which you can see here. And so, if we go to the bottom of the channel, no big deal. That could happen here easily in the next few weeks. But keep something in mind. This is a very key and basic technical pattern. After this long of a period of time, once gold breaks, and listen, it's going to do one of two things. It's going to break below it, or it's going to break above it. And what the trend is telling us, in about 80% of the cases, the trend resolves itself to the direction in which the trend has been going. And in this case, it's clearly up, even over the last decade. Here's a low, higher low, higher low, higher low. Is this going to be a higher low? Most likely. So the trend is higher. And, you know, we could see this verdict, if you will, happen soon. It's going to happen soon. In fact, I think this fall is going to be a big time for gold and silver. And, you know, let's see what happens. But my guess is that when you take this pattern and you take the environment of, with the correlation of the US dollar index, we've got a very ripe environment for a potential breakout of this pattern. And once we do, let's say it does happen on the upside, that's when I've been saying that the violent, more violent nature of this bull market is going to kick into gear. And we're going to start to see gold's pullbacks become brief. They'll be short-lived. They will start to really be bought up significantly by the institutional investors. And we're going to see some teeth in the bull market. So frankly, you know, I just look at these things as a gift. I'm building more positions. I'm buying stocks that, you know, have been beaten down, that have just drifted down. They're not even beaten down. You know, let's just really quick. I'm going to go to one of our favorites in Bovada Gold, which is back under 20 cents. And there's nothing in terms of volume. I mean, nothing. Nothing has been going on for months. You know, you're seeing no buying, really, more than selling. And so the stock has drifted back down to 17 cents. If we take a step back and look at the chart going back to into 2015, you know, we financed this company in early 2016 at a nickel, and we were up 8 times our money within a matter of months. It's a big, big move. Even here at 17 cents, those of us that got involved at that point, we're up 3.5 times our money on the stock, and then another 1.5 on the warrant, which is exercisable at 10 cents. So, you know, a year and a half, it's you know, not worse than a sharp stick in the eye. I'll take it. And it really comes down to, I think, in these cases, what is your perspective? Did you get involved in the gold investment letter, you know, here? And then, you know, I talked about Bovada, and that's where you bought it. And then maybe you averaged in a little bit here because it looked like it was going to break out. You know, you could have a frustrated perspective on the stock, and, you know, that would be fairly normal. But what you have the choice to do is recalibrate your perspective, and, you know, look at this thing. It looks fantastic. I mean, you draw the lines here in this flagging pattern, and it's totally set up for another run to new highs. And that point could be here starting. That point could be here. You know, we'll have to see what happens, you know, this summer and fall. But once the bull market kicks into gear again, I think that, you know, we're going to see these stocks like Bovada, Timberline, they're going to recover very, very quickly on, you know, very low volume in the short term. And then when the bigger volume starts to come in, these things are set up to move. I mean, what has happened is that over the course of the last 15 months, a very big part of the total float in the stock has turned over into new hands. So anybody that was buying here or was hanging on from, you know, 2011, waiting to quote unquote break even or get back to a better position, you know, those people have lightened up here. And now, so the new investor base has a cost average of closer to 20 to 30 cents, 25 cents, let's call it. So they're not looking to sell it. The ones that are still hanging in there are not looking to sell the stock at 30 cents or 35 cents or 40 cents. I mean, you know, the upside because of the cost average in this turnover of the stock is big. And so those are things to keep in mind from a longer term perspective. One of the companies that I think is presenting us with a massive opportunity is Southern Silver. We actually had a situation here back in even I think it was yesterday or Monday. This thing was trading near 30 cents. Even maybe it was yesterday. So this thing was trading at 30 cents. You couldn't have bought a lot there. If you're watching the screen and you see it print down there, you think, oh my gosh, the stock is so cheap. It's down. I'm down if I bought it at 50 cents. But there's no stock being sold off. I mean, you look at the volume here, and it's minuscule. So what has this done? This has created a buying opportunity. Is this the low in Southern Silver? I think it could be. I think it certainly could be. I called the low here, and this one's a little less clear. We could drift a bit further, but this is the area that you want to be a buyer in Southern Silver. This is another one that we came in here at a dime and financed the company. Took a big position in this area initially. When I came out with a report, and that was in May, right around this price point. You can see the volume spike. I think a lot of gold investment letter investors got involved there. And, from the dime placement, this thing was up 6x on the stock price in months. And then another 4.5x on the warrant at 15 cents. So even here at 34.5, we've more than tripled our money on the stock. We've, got another 2x from the entry point at a dime on the warrants. So what's your perspective here? Your perspective is going to be based on when you took action or when you got involved with the gold investment letter. But here's what the fact is. The fact is that Southern Silver has never looked better. The Electrum Group, which is run by and owned by Thomas Kaplan, a billionaire mining entrepreneur and investor with nothing but success in his track record, just sent a check in for like 1.6 million-ish, don't quote me on the exact amount, to take their pro rata share in the $5 million private placement that the company is doing at 40 cents. You can buy it under the placement price right now. So Electrum just wrote a check for almost $2 million and did it at 40 cents. It's a no-brainer that you're going to want to add alongside of them at the prices that they up their ante at least. So when you can buy it at a 15% discount to that or 10%, to me, it makes a lot of sense to be a buyer if you like this thing longer term. We've got a situation with Southern Silver. I went to this property in February. They're wrapping up the drill program. I spoke to the company, and I think, what they were projecting was the wrapping up of the $2 million drill program by the end of May, and then potentially the resource update by the end of June. So that has come and gone. But I think the reason for it is very, very positive, and that is that they were able to squeeze additional drilling out of this $2 million, and we're going to see that instead of the 10,000 meter drill program that they had anticipated, it's going to be closer to 12.5 thousand meters. So more drilling within the budget, which is going to help the ultimate resource upgrade. So here's what I'm thinking on Southern Silver. By September 1 through 30, call it September 15th. Let's look at it there because we'll give them just additional leeway. What we do know is there's more drill results coming out from the end of the program. So that could be out at any time. And I expect them to be very, very good. So, say we get some positive drill results out in the next few weeks, the stock will perk back up. We'll see what happens with the space in August. They're going to be supplying this to the folks that they need to on the resource update. And look, they're talking about potentially doubling this thing. So if they even increase it by 50%, we've still got like $2 billion in city value of zinc and silver primarily in the ground already in Mexico. And at these prices, you're talking about a market cap. I'm just going to pull it up quick so I give you the right number. But the market cap versus what is here is very, very low, and it's not going to last. And when you saw in the past the silver market and the gold miners and the silver miners start to move, Southern Silver was a stud, and it's going to be a stud again. And so this is one of the best of breed. We've got a $30 million Canadian market cap, so call it we're less than $24 million US with $2 billion worth of silver and zinc in the market or in the ground. A potential huge catalyst in upping the resource, call it within the next 60 days or so, 4 to 6 weeks, 4 to 8 weeks, 9 weeks, it's going to be something in there. You don't want to buy this thing after it starts flying again. You want to buy it on these pullbacks. This is when the opportunities present themselves like they did here, where you could have bought it under 30 cents briefly late last year, and then the stock doubled within 2 months. You could have sold out of half of your position and taken all principal risk out. At least you had the opportunity to do it quickly. And now you would own shares for free, and you wouldn't care so much about what it was doing because you banked your principal, and look at it differently. So it's about perspective. My perspective is this is a big buying opportunity on Southern Silver, and I would encourage our readers that are familiar with the story and own stock to have some bids in there. It's especially ideal and opportunistic to have what they call stink bids in. And it might be too late on this, but you put in some bids at 30 cents, 32 cents, 28 cents, you put them in there good till canceled. And if it drifts down on low volume for no real reason fundamentally, you might get lucky and be able to accumulate your stock. But you have to do that in the lulls of when anybody's talking about it, when there's in the news, when I'm not focusing on it, because I think some of you will agree with me and react today and take down some shares below what Electrum just invested in, and take advantage of this dip. So Southern Silver, great opportunity. We've got some of our favorites. Nothing has changed unless I've said it's changed, and that's just a blanket statement on our portfolio. If there's nothing different, then the market fluctuates, and when it fluctuates, it creates opportunities. When it's down, to buy if you believe it's going up, and it creates opportunities to lighten up into strength when that happens. And so we've gotten hit with uranium stocks certainly this year. Those have really pulled back quite a bit with some of the positions, and we're back to square one or even underwater on some of those. So but listen, Southern Silver and Encore Energy or Uranium Resources, for example, just because if you bought one of those and then you say, well, I'm down there, so I'm not going to do anything until I get back to whole on that stock from you, Eric Mashinsky at the Gold Investment Letter. It's just stupid. These are apples and oranges. So, and it's also, I think, really limiting yourself. If you're just buying, one stock or two stocks, and then you say, well, I'm going to see what happens with your track record. Look, my track record is mixed. I will tell you that right now. It's mixed because it depends on when people do things, primarily. That's the biggest impediment that I have as a newsletter writer. Listen, I can tell you one fact for sure. I pick huge winners. I pick losers. There's stocks that go down as well. But I will tell you something. If you buy a handful of stocks through the Gold Investment Letter, and you do it at a time when it's the stocks are down or they haven't run a lot or I'm pounding the table, so to speak, you're going to have some stocks that are going to go up multiples. It's just inevitable. It happens. I'm a professional. I've done this since I was 20 years old. So it's been half of my life that I've done this. I know how to pick stocks. And so when my picks are down, that's when you want to say, okay, it's just like with anybody, your luck, fluctuates. What I used to do is, as a broker, as an aside, there was a guy next to me who was margin to the gills in one particular stock. And I was not as attached emotionally to it. But whenever I looked over at him and he had margin calls coming in, and his guys, some of his big guys, were just getting killed, and he was sweating bullets and looked like he was about to have a heart attack because of the stress. That's when I stepped in. I said to myself, this guy is getting pressured, getting squeezed right now, and it's not going to last. This is a guy who he knows what he's doing, and this is a company that is going to recover. It's under circumstances that are feeding on themselves, whether it was the market environment at that time or just the company, whatever it was. I like to look at certain individuals, and you could do this. I think if you're wise, you're one of the people that, say you were watching Southern Silver and it was running and you said, I'm going to hold off, but I like the company. It's just getting too expensive. And then you look at when it's down, and then you buy those picks when they're down through the gold investment letter. I've got as good of ideas as anybody out there, and those of you that want to play this stuff in a contrarian way, even within our portfolio, I think are going to do very, very well. So, point being, listen, you're going to do what you're going to do, but I think if you limit yourself, you're going to miss out on some big opportunities. There's no question about that. And what I will say is this: because of the field in which we play, one stock can erase a multitude of sins. And what I mean by that is that, say I came out and picked the Southern Silver here at a dime, and you put in a bunch of money. Even at 34.5 cents, you can ride a lot of other positions for free, and they could be down substantially. And you're still up in a big, big way overall on the portfolio. So just buying one and seeing what happens, or buying two and seeing what happens, or you're down. Look at the deal themselves. Look at the markets themselves, and make your decisions based on that as well. This isn't just because at one point I come out with a recommendation on the stock and talk about it because I'm very enthusiastic longer term, and it goes up and then it comes back down. Nothing has changed. These companies are moving their projects forward. And in the case of, for example, Southern Silver, they're doing it very aggressively. So in any event, I'm going to move on. And what I want to talk about a little bit is lithium. This is just one of the third-party independent groups that have really done deep dives into the supply-demand dynamics on lithium. And, we are still going to see some real interesting activity in the lithium space. And so I think actually later this year is when we're going to see some action really return in the lithium space. I don't know how long this bull cycle is going to last, but there is more life left in it. I'm very confident of that. I've been doing more research just on the entire supply-demand dynamics. And lithium is going to correct itself, in time. There was a mad rush after the initial surge here a couple of years ago in the lithium price. So supply will come online, but that's not going to happen now, and it's not really going to happen in 2018. So we have an environment that I think, with certain companies that are moving aggressively forward, we can make some money. And the one that I like right now quite a bit on the price side, that's over $1. I mean, I really am exploration as well still. That one's drifted down at below a dime. But Millennial Lithium, I called this again to your attention when we broke out of this triangle. It was last week, and big volume came in on terrific news that they released, and these guys are moving Mach speed towards a preliminary economic assessment that will be out by the end of the year. And technically, this is a big breakout that happened last week. So the worst that can happen is it can retest the top of the channel. I think that's probably that's typically the worst that's going to happen in the short term. But on this one, I think based on how long this thing is consolidated, which has been a very, very long time, almost a year, I think it's about to shoot up again, and we're going to make a big run soon. I think we're going into the twos this time on Millennial Lithium, probably by September, if not even quicker, because a big volume surge again, and this thing is going to pop, and I think it stays up. We're going to have a little bit of resistance in the 180 area, which was the last high that was earlier this year. But after that, the next stop is going to be that 250 area. So really like Millennial Lithium, they've got a lot of good stuff going on. Their asset in Argentina is very comparable in size and grade to Lithium X, but has a market capitalization that is less than a third of Lithium X, even though their project is further along. Millennial is catching up in terms of the stages. So great idea right now to be buying that on weakness. And then, the last thing I'm going to mention is when you look at the information on supply demand with some of these new metals, the new energy metals, the new battery metals, there's one area that clearly is going to skyrocket, and that is cobalt. Cobalt is in a predicament, much worse in terms of the supply problems than lithium. The price of cobalt has gone up from about $9 a pound to $25, $26. It's stabilized here for the last 3, 4, 5 months. A lot of the stocks have consolidated after they did make a run, but they're going to make another big run. In fact, I think that the supply-demand situation with cobalt could be one of the biggest imbalances in any mineral ever coming up. It's a big deal, and so what we want to do is identify the best assets, the best run companies, the best valuations, and get some additional exposure in cobalt. I've been looking into this space aggressively for the last couple of months. I found the best junior that exists today. I'm extremely confident of that statement. Tonight, I'm going to release that pick, and alongside of it, because we don't quite have it filled yet, for those of you that are accredited high net worth individuals, for those that act quick when you see that email, if you like what you see, and I'm sure that you will if you take a close look at this deal, if you jump on it, you're going to be able to potentially be involved and included alongside of our elite, some premium members in a private placement that's a 20% discount to market with a full warrant. And so I would encourage you guys to keep an eye out for that pick. So it's this one's going to be huge. It's going to be, as Donald would say, huge. I'm basically telling you that that's going to be the case, not only with cobalt in general, but with this specific company. We've recommended Cruise Cobalt. I still like it. I do. I think they've got a good story, and for the reasons I recommended it before, those remain. And that's primarily that those guys were they're big marketers, so the story's out there, and it's going to continue to get out there. So they create volume in the stock. The other thing is that they're a prospect generator, which is a good model. And the real key thing was I picked them because they had essentially a first mover-ish sort of an advantage. And when I say first mover-ish, it's because they started to lock down a lot of their properties about 18 months ago or so, 2 years ago at maximum. So that's an early mover in the cobalt space because they did it before the price started to rise sharply in the second half of last year. But that said, I have no way to really analyze the projects within their portfolio and the quality thereof. I think that a lot of them are much earlier stage, and but look, there's the problem that exists out there, which creates a massive opportunity for us, is that there's really very few quality cobalt names to invest in. As investors realize what's happening in the cobalt marketplace, they're going to want to put money into the companies that are looking for it and producing it. And you look it up against like the lithium space, where there's hundreds and hundreds of these juniors. Cobalt, there's like a dozen, maybe if that. There's just not a lot out there, and you're going to see a rush into the space most certainly. So that's why I think with Cruise, they've got a good story with the marketing. They're going to move some of that stuff forward. They raise money, so I think the stock will do well. The one that I'm going to recommend will do much better. Does that mean you sell Cruise to go into this one? I don't know. I mean, if you can afford it, you want to have a couple of these cobalt companies in the books, because this is the most exciting area, I think, out there. Over the course of, let's call it, the next 12 to 18 months, there's huge upside in some of these plays. And the one that we've identified has really a lot of characteristics that make it very, very unique. And you're going to hear about that tonight. So that's it for this morning, folks. I hope some of this was helpful to you, and we will be in touch shortly. Thanks.